What happens when a Coinbase-backed project launches a token that loses 99% of its value in minutes? Meanwhile, a coin literally named after flatulence is approaching $1 billion market cap. This is exactly what's happening right now in crypto, and I'm breaking it all down in today's Crypto Pulse. Let's dive in. Hey crypto family, Alex here from Moonward Capital with your 6-minute Crypto Pulse update for April 17th, 2025. If you're new here, twice a day, I bring you the most important developments in the crypto markets to keep you ahead of the crowd. And today's stories are wild. Make sure you watch until the end, because the contrast we're seeing might completely change how you think about crypto projects. Let's start with a quick market snapshot. Bitcoin is holding steady above $84,000, up 0.4%. Ethereum's at $1,589, up 0.5%. The overall crypto market sits at $1.67 trillion, with Bitcoin dominance at 43.8%. The real standout is Solana, surging 3.6% to $131. But the sector performance tells an even more interesting story. DeFi applications are leading with a massive 22.98% gain, while social tokens are up 7.19%. The Fear and Greed Index sits at 33. We're still in fear territory, but that's actually an improvement from extreme fear last week. Now for our first major story, and it's a disaster. Base, the Layer 2 solution backed by Coinbase, just launched a token called Base is for everyone. Except apparently it wasn't for everyone, just for a couple of savvy traders. Here's what happened. The token launched on Zora and quickly surged to an $8.1 million market cap. But within minutes, two wallets that had purchased 21% of the supply for just 2 ETH sold their positions for $300,000 in profit. The token immediately crashed 99%, leaving retail investors holding worthless bags. Base clarified these were not official brand tokens, but rather an experiment in on-chain content. Let's be real here. When a project backed by Coinbase launches a token without proper sniping protection, that does serious damage to trust in the entire L2 ecosystem. The crypto community isn't buying the just an experiment excuse, with many labeling it a rug pull. In stark contrast to the Base token disaster, Fartcoin continues its remarkable ascent. Yes, you heard that right. A coin literally named after flatulence is now trading at 93 cents, with a market cap of nearly $930 million. What's driving this surge? A single whale purchased 11.21 million tokens worth $9.97 million at an average price of 89 cents. This strategic accumulation has helped fuel a 12% gain in just 24 hours. Technical indicators remain bullish, with RSI in overbought territory and increased on-chain activity suggesting a push toward the symbolic $1 milestone is possible soon. This creates a fascinating contrast. A token backed by a multi-billion-dollar company crashes 99%, while a memecoin about flatulence approaches $1 billion valuation. Welcome to crypto in 2025. Our third major story involves FDUSD, First Digital Stablecoin, which suffered a significant depeg, dropping as low as 76 cents before partially recovering. This follows rumors about reserve issues amplified by comments from Justin Sun. The incident has raised fresh concerns about stablecoin stability and transparency in the broader crypto ecosystem. Coming after Circle's USDC depegging last year, this highlights the ongoing challenges in maintaining stable assets in a volatile market. If you're holding FDUSD, you might want to reassess your exposure until more clarity emerges. Looking at sector performance more broadly, there's something fascinating happening with social tokens. SocialFi shows perfect alignment between price action, plus 7.19%, and mindshare, 7.19%, indicating genuine market interest rather than manipulated movement. This organic growth contrasts sharply with Base's failed token experiment. Meanwhile, DeFi applications have surged 22.98% despite minimal mindshare, 0.52%, suggesting potential for continued momentum as awareness catches up to price action. So what should you do with this information? First, avoid buying into hype token launches without proper snipe protection. The Base token disaster shows how quickly these can go to zero. Second, consider taking profits on memecoins showing parabolic growth. While Fartcoin might reach $1, remember that momentum can reverse just as quickly. Third, evaluate your stablecoin exposure and consider diversification across multiple issuers given the FDUSD depeg. Now I want to hear from you. Is the tokenize everything narrative sustainable? Or are we witnessing the beginning of a memecoin bubble similar to 2021? Drop your thoughts in the comments below. That's your Crypto Pulse update for April 17th, 2025. If you found this valuable, hit that like button and subscribe for more updates twice daily. This is Alex from Moonward Capital, helping you stay ahead of the crowd. See you in 12 hours for our next update.